Good morning. This is the weekend update for Buy Sell Short for Monday, May 27th. I hope everyone is having a fantastic Memorial weekend. Let's jump into this real quick so everyone can get back to enjoying the nice long weekend. We're going to start off today with the 15-minute chart of the Dow. And you recall, over the last couple of weeks, it's been really in a pretty tight range. And I've expanded it a little bit here because it's something we need to keep an eye on. You can see that we're starting to get higher highs and higher lows out of the channel, and this is essentially called an expanding wedge. You had that rising channel that was in place where it essentially just follows a narrow rectangle all the way higher, but as you can see, we are starting to spread out here at the top, and that is typically viewed as a bearish development, so something we need to keep an eye on. Now, that's not to say we need to run and stick our heads in the ground or anything. It just means the large cap stocks that have been driving this rally could be and should be way overdue for a pause. Now, as we saw over the last couple of days, that is not such a bad thing because the speculative money has really started to flow down into the cheaper stocks. Last week was a fantastic week for us. Lots of momentum, lots of plays, even Friday ahead of a long weekend, very, very active with a lot of big movers. So on the positive note, the retrace in the large cap stocks does not mean we're not going to have stocks to trade. Far from it. Now, if we flip over and look at the daily chart, shows the kind of chop confusion that is ongoing right now. The dip that we had last week, of course, was driven by fears that the Fed is going to pull back from its quantitative easing, even though it's many, many months away, and we've heard this same chatter really over the last couple of years. So one thing we do need to take a note of is the big sell-off that's ongoing in Japan right now. Japan was down 10% on Wednesday. Bounced back, it lost 1,000 points Wednesday, bounced back with about a 450 bounce on Thursday, and actually today / last night ended up giving up another 400 points. So, you've got people here going, well, Japan was up huge, and they were up huge. Their market is up like 40% in the last 4 or 5 months, so they were way overdue for a big pullback. But, they're starting to equate the sell-off there to something that could happen here. Now, support right now is right where we bounced the other day. We've got the 20-day exponential right here at 15,131. Then below that is the next big band of support, which is at 14,888. That's about, 500-point downside. Now, if we go from the top seen earlier last week to that 14,888 area, that's about a 750-point drop. And if we go back a few years, let's pull up a 5-year chart so we can pull it all in. Back in the day, in the 2009 rally, 2009, 2010, 500, 750-point retraces were a pretty common occurrence. I mean, we've gone quite a long time without getting any sort of significant pullback in this market. So the risk for that is definitely there. Doesn't mean we're going to not trade the momentum that is out there. Dow Transports, let's look at that chart real quick. Dow Transports actually bucked the trend on Friday, although the volume was pretty muted. It's right down at the 20-day exponential and right at a support level. Now, we've got RSI came off that pretty overbought condition and is getting ready for a 50 bounce. We did get a negative MACD cross on Friday, but we've also seen Stochastics getting to that 50 level as well. So if the sell-off is going to continue, we could see the trannies down at about 6K, and we would see Stochastics not bounce at 50, and the same thing for RSI. So we want to see a bounce happen early this week. Otherwise, we're probably looking at, a few days little drop here. Now, to step back and look at things, since all this European crap that's been knocking the market down over the last 3-4 summers has emerged, every time we have had any sort of sell-off or panic in the market, it's because we've had some sort of issue in Europe, bond prices spiking for the member countries, etc., etc. That is not the case this time. The sell-off is going to be because the punch bowl might get pulled away in a few months, and that's because the economy is starting to get better. Now, as a side note, interesting thing out of Germany today, Germany is now considering doing stimulus plans, and these are the guys who have pretty much hamstrung Europe over the last 3-4 years with the nonsense austerity. I mean, they went too far chopping when you are supposed to spend when you have issues, and now it seems like the Germans are ready to allow money to be spent in Germany and some of the other countries, so that could be viewed as a positive for down the road. For now, we're way overbought. We could pull back at any time, but again, as I said, we don't need to be trading scared. We just need to continue doing what we've been doing. A quick look at the Russell. Russell is actually a little bit of a disconnect between the Russell and the Dow Transports over the last 2 days, although I wasn't really paying attention to the trannies on Friday, so that red close might have been more that late day paint job that is quite common in the large cap stocks these days. But the Russell holding very strong above the 20-day exponential, so we want to see that 970 level hold early this week, and if it does, we could see a retest of the highs on the Russell. Now, we started to see some of that action with, even though the market was kind of weakish on Friday and Thursday, that we saw very nice strength in the small cap and micro cap stocks. So these stocks, if the economy actually is getting better and the Fed is getting ready to pull the punch bowl away, the area that will benefit the most is small caps, because small caps are U.S.-dominated companies for the most part, and in the early stages of a recovery, small cap stocks do great, and that's just how it goes. But anyway, let's jump into some stock plays. BLDP. Ballard Power on the pop scan on Friday for a 125 break, and this stock went boom. Fuel Cell FCEL led the charge, moving nicely higher. We jumped into a gapper position on this one late on Friday, just given the extreme strength we saw in Fuel Cell that busted up through the 150 area. This one closed, I believe, at $1.39, I think was the official close on Friday. In Canada and in the European markets, Canada specifically, Ballard Power is up 11% today, trading 158 on pretty heavy volume. BLD is the symbol if you're looking on the Canadian Stock Exchange. So we're looking at a gapper here. 144 was the breakout level, but it looks like it's going to gap well above that. And if we actually go look at a, whoops, here's a 2-year chart. You can see once we get through that 144, 154, 159, 175 are the target objectives on this one. Now, the stock that also runs hand in hand with this one is Plug. Plug gave us a monster win last week. Then we had that pullback, just like it did back in March. And you recall I said, if we follow that pattern over the next couple of days, the stock will rocket. But actually, it gained serious strength late in the day on Friday and is right at a pretty big breakout. With Ballard Power and Fuel Cell gapping like they are after hours and overseas market, I'd be very surprised not to see this stock try and make a run on the 200-day moving average early this week, and that's up there at 54 cents. So this one could be rocking and rolling, and when this one starts to go like it is, HTM, these guys, of all these alternative energy stocks running right now, these are the only ones that are profitable. They make money. Cash flow. First time ever making money. 10-year-old business. New power plant online. They've guided for profitability for the rest of the year. This stock should rock and roll on a break of 43, 44 cents. And if we pull up, here is a 3-year chart of it. You can see that 43, 44 cents, and then we've got 48. And then we've got some spike highs up here, 60 to 70 cents. If this alternative energy momentum, and it doesn't look like it's showing any signs of holding back, continues for the next few days, we could be talking about HTM next weekend trading in the 60-plus area, which is a fantastic return from where we're in. So could be a very, very nice week for these stocks. And another one that we jumped into in the chat room on Friday was QTWW. Now this can be a very frustrating stock to trade. Looks like it's going to run, then the rug gets pulled out of it. Got a late day surge, 65 cents is a breakout. Could have a magnet towards that 200-day moving average on Tuesday up there at 71 cents. So the sector's really picking up, and there are very, very few stocks left down in the under $2 level thanks to reverse splits, buyouts, OTC delistments, etc., etc. So just like the solars and just like the shippers, there are not a whole lot of stocks to play when the momentum comes in, which means the momentum in the few plays that there are gets to be even stronger. Now, another thing that we've actually started to see happen over the last few days are very nice chart breakouts are ripping. Very, very good signs. So Friday, BPAX, we were seeing a lot of nice wedge breakouts happening, and this stock was just coiling right underneath its 50-day moving average. 115, 116 is where we jumped into in the chat room, and the stock went boom, closed right at the highs of the day. And one of the reasons I like this stock was they're merging with another company, and the vote for both shareholder companies is not until middle of June sometime. These guys have lots of cash. They've got an upcoming vote coming. It's over $1. So what that means is it's unlikely there'll be any sort of news out of these guys until the shareholder meetings, meaning they don't need dilution. There's no delisting. So it is a good risk-reward play on a nice chart, which is exactly what we wanted over a long weekend. First target is the 200-day moving average at $1.35. Very, very nice volume on a pre-long weekend or holiday weekend. Very bullish sign for the stock. We've got some nice technical outlooks on this stock going into this week, and I'll be very surprised if we don't see this one trade up around the 135 level early Tuesday. With that in mind, we also have ETRM. Now, a week or so ago, they finally came out with that news that we've been waiting for forever and ever regarding their FDA filing for their diet tool, essentially. Kind of like the lap band, but much safer. Got that big spike, and since that news, it's been consolidating around the $1 level. Now, in their earnings report and in that update they gave, they said that they would be filing with the FDA before the end of the second quarter. Well, guess what? The end of the second quarter is a little over 30 days away. So we are overdue for some news very, very soon. The chart looks very nice. These guys are loaded with cash. Breakout, got a couple of breakouts here. $1.10 will start to really bring the chasers in. $1.14 and it's off to the races. And target on this one is $1.33, which is, to give you a bit of background if you're not familiar, this stock was essentially a $2 to $3 range stock. Then they came out and their trial that they did not meet their desired endpoints, which means they designed their study poorly, and the stock went splat, as most bios do when you come out and don't meet your endpoints. But, as I mentioned before, the company said, even though we did not meet the endpoints, we are still going to file for FDA approval, and that is not unheard of, and is actually pretty typical for device manufacturers such as ETRM. So the stock has consolidated for quite a while, and the example we had was ZIOP, which we traded on Thursday and left a crap load of money on the table. But you can see similar thing. Tank, consolidation for 3 months, kaboom. We go back and we look at ETRM, tank, consolidation for 4 months, ready for a big boom move. FDA filing, when it comes, I think we'll rocket this one higher. Very, very nice setup with support at 99 cents. So we've got small downside risk, big upside reward. These are the kind of plays we want to play. So we've got some very nice setups going into this week. Again, hasn't been a whole lot of email alerts because the momentum is just changing really rapidly. One day it's solars, one day it's shippers, then it's bios. So if you can, definitely come into the chat room. It's been hot and heavy, lots of fat wins, and I think we're going to see more of the same this upcoming week. So have a great Memorial weekend. Thank you to all you servicemen and women who, you know, let us or give us the ability to do what we do on a daily basis. So thank you very much. Have a great Monday, guys, and see you in the chat room tomorrow. Bye.